Hello and welcome to Property Question Time. I'm Stephen Galpin and this is the show where you can have your property related questions answered by our team of property experts. And joining me today for the first time is Farrell, co-founder of OFFR Property Transactions, which is a software company endeavouring to help the real estate market with its conveyancing.
Absolutely.
Okay,
Absolutely.
lovely. Okay, and joining Philip is Byron Crellin, who's a regular for Property Question Time now, CEO of Clearway Debt Squared, commercial property management specialist.
Hey, Stephen.
Welcome to you, Byron.
Good to see you.
Good, nice to have you both here. Thank you for that. And Byron, you're going first. New data shows small businesses received 21.3 billion in COVID-19 local authority business support grants. With these grants on the imminent commencement of bounce back loan repayments, what impact do the panel think this will have across the property market in terms of business failures? This is going to be happy stuff, isn't it?
I'm just thinking, the last time I was in the studio, I was wittering on about businesses and financial distress and a spike in terms of the number of insolvencies. We collate as a business data. Now, this data is not unique to us, so it is out there, and other companies will use it. Insolvency practitioners will use it, banks will use it, but we're using data and we collect data that's in a non-footprint. So we're looking at businesses. We're tracking every single business in the UK. We're tracking directors, and what we're trying to do is say to a commercial landlord, "Here's your portfolio. Put it into the cloud, into the data, and what the data is going to do is create us this traffic light report. And the key thing is don't worry about the greens. Let's focus on the reds, because what's in the red is potential distress, probably already in default with you, Mr. Landlord. So what we have to do is work out whether this is a recoverable debt, what's the best course of action, and when to take that course of action." There's a whole range of dynamics. There's no one answer to this question, because there's a whole range of dynamics. So we've seen an increase in insolvency appointments. Now, within that spike, and Q2, I mentioned it in the previous show, Q2 2021 in a pandemic versus Q2 this year, arguably, are we still in a pandemic? We're out of it, to be honest. We're 37% increase in 2022 against 2021 in terms of insolvencies.
But is that because of 21, or is it because of things that are happening in 22?
It's legacy debt. It's the cost of living. I mean, we saw an increase in terms of business formations in a pandemic. It basically means that new businesses starting up, and that's a slightly worrying sign for people that collect and monitor data, because what does that tell us? Is that, well, that's great. People are being buoyant and going, no, we'll beat the pandemic and we'll start a new business, etc. Well, cost of living is going through the roof. Unless you've got something that is, a clever business, data or a cloud-based solution, it's a real nervous time for both business startups, for existing directors, small and big organisations that are carrying huge amounts of debt. Commercial landlords, big unsecured creditors in terms of this scenario. We're not seeing any sort of stabilisation in terms of trend, but I think we're on the tip of an iceberg again. And I think by the end of this year, I think it's going to be, there's a lot of pain to come. And I think by the end of this year, we're going to be worse off in terms of debt, in terms of business startup versus business success. But I think we have to have that pain to come through the other side. Data tells us there's a lot of businesses out there that will not recover from this unless they get assistance again.
Let's just look at this from a normal family's point of view. Households in the UK don't have access and don't study the data that you do. Okay, what they see is what's before them when they visit the high street or they visit their shopping centre. Are we going to see visual effects of this? I suppose, to all intents and purposes, what's going to be a recession?
Oh, I think we're just waiting to be told that we're in a recession, because that's going to happen.
But are we going to see further deterioration of high streets and shopping centres and that sort of thing?
Yeah, I generally believe we will, because you've got landlords that have been funding tenants through the pandemic, i.e. they've been negotiating with rents, they've been writing off rents, either in full or in part. They've been negotiating on service charge, and that's a tough market space as well in terms of what does that look like going forward. I think some of these businesses, we talk about sort of like a director of a shop, and that person, thinking about closing their business, but the knock-on effect is then redundancies. Coming out of the pandemic, people coming back to work, some people from the leisure side came back with 2 jobs, 3 jobs. Still got 20 days worth of holiday that they need to be paid for, and the owner's going, hang on a minute, that's different.
Funnily enough, furlough, for instance, had some very odd effects. I'm sure you've seen it many times. Somebody's put on furlough, and they were actually allowed to take another job and run it side by side with the job that they were furloughed from. So actually, some people did very, very well out of furlough. In fact, they had two incomes, but of course, all that's come to an end now. Do you think? Philip, for instance, you're in a business where you see, the spectrum events across the real estate industry. Do you concur with Byron's view of what's going to happen?
Well, it's unprecedented what's taking place at the moment. We've just come out, as you say, of a pandemic, and I saw something very interesting recently, whereby a very experienced real estate professional said he has never seen so many conflicting trends and stats. So you go back to say 2007, 2008, when we had it was all credit fueled. This instance, it's not. However, it's I think from a residential perspective, things are less, the outlook is less negative. I still think there are challenges coming for the residential sector. I think obviously, as Byron alluded to there, the commercial space with landlords and tenants, if it was a boxing fight, there's a second big punch coming, or we're in the middle of a second big punch, where COVID being the first. So from that perspective, I wouldn't be as downbeat about the residential. I do believe we're in for a period of stagnation. The last 2 years have been ridiculous. So you had 1.5 million transactions in the UK last year. Normally it's 1.1, 1.2 million. So that in itself, now obviously that was fueled by the stamp duty facility, et cetera, exemption. So from that perspective, there was a pent up demand. It's going to be interesting. I think, the best case scenario this time, 12 months from a property value perspective, is you're going to see values at the same level. I think that's the best case scenario.
Okay.
I don't see a crash though.
I think it's just very quickly, Stephen, I think it's interesting with the residential side, because we've got a commercial client who have their own business investment, got about 150 shops tucked away in the West Midlands, predominantly it's all takeaways, etc. They've come out of their mortgaged house, rented it to go into rented because they can't afford the mortgage, because they've had no revenue coming through. They're in default with their pension, and the pension company's writing to them saying, you're in default with your SIP account, which we can enforce against you. And he's going, it's my pension, and I'm not getting any rent. So I can't pay my pension because my revenue is not coming through. Yeah. He's moved out of his house. I think rent market, potentially, this could be boom.
Yeah, and in a way, residential is the new commercial, in the sense where the key profits are, in the sense, because even worldwide, and that has been accelerated by pandemic, because now we've put a value on where we live as part of where we work as well. So there's a combination there. So and we'll always need somewhere to live. We can go and commercially we can exist somewhere else.
Okay. Well, Philip, we'll have to move on with your question very quickly.
Yes.
I'm fairly new to the property investment industry, and I'm being continually frustrated by the lack of speed in conveyancing. Solicitors seem to be the cause, but in reality, it seems to be a lack of joined up communication between all parties concerned. Do the panel have any advice as to how to streamline the sale and purchase process?
Well, I have very strong views on this. My own background, I've been in state agency for 35 years in different forms, and I've ended up in the property technology space. As far as I'm concerned, the process is broken. So from a buyer, a seller, an agent, or a solicitor's perspective, we're dealing with an archaic, outdated process, which is paper-based, it's common law-based, and it worked, but it's been the same for 200 years. The real problems occur in excessive administration and poor communication. And you would have seen in recent years, you have the arrival of the hybrid or the online type agents, pure online, and then you have the traditional agents, where I see the next phase of the property transaction cycle will be the hybrid. The absolute retention of the agent to handhold, to value, to mind, to negotiate. But technology, it has affected every other sector: finance, retail, travel, etc., etc. Property is the biggest asset class in the world. It is also a very traditional sector. So I feel that what needs to happen is the admin and communication piece can be made far more efficient by embracing technology and digitizing that aspect of the transaction.
Yes. And I suppose this really, should shut down the idea of solicitors taking on too much work and then just acting in a reactive manner to whatever comes to the top of the pile, rather than
absolutely. Well, obviously there's a historically, let's call a spade, solicitors have blamed agents and agents have blamed solicitors.
Yes.
And that will go on forever.
Yes.
I
think if you've come up with a solution that saves solicitors getting 30, 40 calls from an agent each week, then you've really cracked it. Okay, well, that's all we've got time for in this half of the show. So join me again after the break when Byron and Philip will be answering more of your questions. Hello and welcome back to part 2 of Property Question Time. I'm Stephen Galpin and I'm joined by Byron Crellin and Philip Farrell, who are going to be answering more of your questions now. So, Byron, your second question of the programme. With UK inflation set to reach a 40-year high of 11% or more in the autumn, and predictions of rising interest rates and recession, facilities management financial officers and treasury teams may be concerned with the implications for financing. Do the panel foresee facility management services being impacted, resulting in a drop of support services across UK portfolios? That's quite a complex question. But
it is, and I thank the viewer for that. And pass.
We'll keep you on your toes.
Well, yeah, absolutely. Just let's break that down a moment for everybody. So, facility management services, we pay our service charge, and as part of that, whether you're in a commercial portfolio or residential stock in rented accommodation, etc., you'll be paying a service charge for bins, outside maintenance, window cleaning, landscape gardeners coming in and keeping it tidy, etc. In terms of industrial estates, it will be perhaps for 24/7 gatehouse security. So there's a whole range of sort of services that capture sort of under an umbrella of facility management services. There's no sort of like, oh, it's because you've got to pay for the guy that fixed the lift. It's you're paying a service charge for the enjoyment of your property, whether it be residential or commercial. We act for a residential client that you have a mortgage and it's your house, etc. But you're sort of living within like small communities, and they have their own road sweepers. It's very sort of niche, very cosmopolitan, and that's what you're paying for. When you elect to go onto their portfolio, that's the kind of thing that you're paying for. In terms of the commercial side, it's the standard stuff. The bins that are being emptied, the lights are on outside, security are on foot doing patrols, etc. Enabling you as a tenant, residential or commercial, to have enjoyment of your property. Now, diving into the question fundamentally is, if the landlord or the managing agent has had difficulty or has seen a decrease in payments coming through from those tenants, is the service going to be impacted because they're paying for a service for that to happen? And if they're not paying for it, can that service still take place?
And to be very clear on that, in any kind of leasehold situation, it is the freeholder's duty to maintain those services, isn't
absolutely.
it?
Yeah, absolutely. From an insurance compliance point of view, because if somebody trips over because something, then it's like, who's to blame? Well, you didn't pay your service charge, but you've still got a landlord's responsibility to ensure that, paths and roadways are clean and accessible, etc., for deliveries, etc. So it's a real complication in terms of the depth of who is ultimately responsible. Contractually, the tenant is responsible to pay their service charge. Now, service charge can be withheld if the landlord has failed on their part to provide a service. But in terms of this, and the reality is what the UK climate looks like at this moment in time, is there an expected implication and impact on, I think there's two parts here. Is there going to be a disruption to services being provided? I think there will be an impact. I thought we were seeing an impact pre-pandemic. We saw a bigger impact during the course of the pandemic. So that's always going to be in our life, and it's going to do this because of circumstances. In terms of organisations that have withheld those services and provide those services within their business, we are best described as a sort of like a broker business, where we provide services part of a bigger organisation. So we're able to use the infrastructure of our group to provide services so we're not in a singular format providing that's what we do. We provide these services. And I think clients will tend to look at people like us in the market space to say, you'll now become a more preferable outsourced solution than us having to run the internal operation ourselves. It'll be a cheaper version to think about the outsource stop and go service, rather than going, I've got the infrastructure, the payroll, the fleet, etc. So I think there's different dynamics, and there is, again, we've had some great questions, but and I don't think there is this definitive, and the answer is, I think we're going to be impacted because the cost of living, etc. Service charges are going to be probably behind rent being paid. I mean, this isn't breaking news, but some commercial landlord managing agents will be going, get the service charge before the rent.
But you know what? I think along with sort of Philip's strategy in business of really, I suppose, revolutionising the conveyancing industry, I think it is a time for change. And I think we're going to see a lot of change over the coming months. I really do. Because I think the opportunity is there.
Well, it's interesting. We have a client that appointed us because of a proposition that we put forward, which had multiple touch points of a service. So we were providing not one, here's the job that we do. We provided this infrastructure. That enabled them to terminate 26 subcontractors.
Yeah, I see it.
And they said that the self-management of those 26 subcontractors to then have a singular point of contact with agreed KPIs, account director, management team, and then doing the do is a different dynamic. And I think that's they're kind of trends that I do think that will start to come through, and we'll see more of in 2023.
Okay, thank you for that, Byron. Philip, your next question, I think I couldn't think of anybody better to answer this. You have a good overview of the agency business. I am considering placing my home on the market for sale. I'm torn between choosing a conventional estate agency or an exclusive online-only firm, the latter being much cheaper. My main concern is that if I choose an online-only agent, will the supervision of the transaction, i.e. taking things to exchange and subsequent completion, be compromised and in the event be a false economy?
Wow. Very good question. Yeah, and it's one that has come up before. My personal view on it is that most people need an estate agent. The process is too emotive, it's too personal in a lot of cases. It's their home, it's their biggest asset. They are not objective, and they need to be guided. Now, there are certain people watching here today who are maybe professional landlords who are very comfortable in the environment of looking after their own portfolio and selling their own. I think ultimately you're only going to see, and we've seen, the arrival of the online agents 5, 6, 7 years ago. There was a lot of consolidation, and now you're seeing it has gone from about 7.5% of the total sales in the UK back to about 4.5%. And I think ultimately what you're going to see, if I was to say to you that approximately, and this is a crude figure, approximately 1 in 10 people might be comfortable selling their own property. I think 90% of people would still want, and funnily enough, it's not the cost, necessarily that's the big issue for them. It's that they are doing it correctly, that they are getting the maximum value for it, that they are marketing it correctly, that you're getting to the right people. So ultimately, and I touched on earlier about the whole idea of the hybrid model, you will see 100% retention of estate agents handling property transactions forever and a day. And yes, technology will ultimately change and tweak what the process is. And I think ultimately, I mentioned earlier that it's a very traditional sector and it's a very slow changing sector. But the difference now is that this is going to be consumer driven. Because the consumer of today, anybody under 40, their life goes on in their smartphone. And if an agent can't deliver the service that's required, it's instant gratification, they will go to somebody else. And it will reach a tipping point where agents will say, okay, if I don't change or go with this, and it'll affect my bottom line. And that's what's starting to happen now.
I think it's interesting, isn't it? I mean, go back a couple of years ago, and if somebody said to us in the street, the next car you'll buy will be off a website that you'll never see, and it'll be delivered to your house. And actually, if you don't get on with it, you can probably get a refund within a period of time. We'd go, nah, because the whole idea of going to a garage and opening the door and sitting in it and going, yeah, okay, this is the one for us.
The only difference I would suggest there is that the transaction for the property is a lot more significant. A car is a 2, 3, 4 year purchase or life cycle. But ultimately with the property, it's your home. It's.
Did we not see though in the pandemic, estate agents go, we can't do viewings, so they move to a virtual world?
Yes.
Is that trend going to continue now?
Well, what happened at the time was there was a shift, and there was a focus by agents all of a sudden that we need to move online. Okay, but it's still a people.
To be up to date.
Yeah. But also it's still a people business.
Look, there's 2 points here, isn't there? One, if you're buying a property for maybe hundreds of thousands of pounds, if not millions of pounds, actually just you want a bit of attention.
Yeah.
You know, and the online agent doesn't give you that attention. The other thing is that I think we all know we're all in the property market one way or another. I think we all realise that the key situation, I know a lot of people say, oh, what's an agent done? All he's done is walk somebody around my house and earned a huge fee. Well, no, it's the transaction between that reservation and the completion that really matters. And again, the online agents, I know 1 or 2 of these people, and they will say, oh, well, we don't have to worry about the progressing of the transaction, because actually if there's somebody else in the chain, their solicitors will do it, their agent will do it, so we can just sit back and let it happen. But that's not really satisfactory, because the amount of sales that fall through in between reservation and exchange are huge.
1 in 3.
Yeah.
1 in 3.
Yeah. Okay, well, on that note, I'm going to say thank you very much to you guys. That's Byron Crellin and Philip. Farrell, thank you very much for coming in today.
Thank you.
Great answers to some quite difficult questions. But again, thank you. So I'm Stephen Galpin. Join me again next time on Property Question Time.